We're running. It's recording. So we are
We are back.
shooting the shit.
Oh, jeez.
Episode 2. It's a new year. I got a new camera. I got a new mic. It looks like Shakes.
The kid is back.
Yeah. Um, and we're out here. We're going to talk about a couple different things. Just kind of going to do a little recap about 2019. And we're going to start off with maybe the biggest lesson you learned for 2019.
All
So,
right,
Shakes.
absolutely, yeah. I'll jump in. So I'd say the biggest lesson for me is I've always been a trader who goes on runs, and for me this year it was kind of feeling out the runs when they were going to happen and kind of adjusting my risk accordingly.
Mhm.
So in the most basic sense, it's kind of like feeling the ebbs and flows of trading.
Yeah.
So I'm not. I would, this year was the first year I've ever taken a couple weeks off trading while I'm sitting at my desk every day, just kind of watching the action. I couldn't even imagine doing that a year or 2 years ago. So for me, it was kind of waiting on my setups more, putting more impact into the setups that I loved, and not being so gung ho, risk on every single day. Kind of just every year I improve on just kind of losing the day trader habits more and
Yeah.
more and more. So I'd say my biggest lesson I took out of this year was just feeling the ebbs and flows, going risk on at the right times, kind
Mhm.
of putting more weight into single setups than just kind of shotgun approach, 1% risk here, 1% risk here, 1% risk here. More of like,
Yeah.
I like this one a lot. I'm gonna focus on this for the next 2 weeks. So
Mhm.
that was the biggest lesson I got out of this year, really. What would you say was yours?
I mean, I would say that this is kind of like my first full year after really getting some experience trading and being in Alpha Chat. I've been there for like almost 3 years. So like the first year I, was training. I was just experiencing things and just experimenting, making a ton of mistakes. And now I'm starting to kind of just gather, I guess, more data on like what I'm actually good at, what is my A plus setup, what do I do well, and like what should I focus on. So my biggest lesson, I guess it's very similar to yours, is just kind of only striking when the iron's hot and like really studying a specific stock because I'm better off focusing on one or two and maybe putting a little more capital into them over time than putting a little bit everywhere. Just my style. I mean, there are certain people in our chat that have 15, 20 names at the same time. They got a little bit in every single one and they're able to manage it that way. For me, I think I'm better at, focusing more on like maybe five at a time.
Right.
So that was like my biggest lesson is just balancing my trades a little bit better and rotating out of things that are maybe done with the move so I can just move on to the next thing and just kind of avoiding greed. While we do say stick to our winners, um, I think there were a lot of times where I had a winner and I was just so convinced that it was just going to keep winning and winning and winning that I didn't take enough off and like into like really strong pops. And that kind of hurt me. Like just looking back at all my trades, I'm looking at a lot of these trades that were winners, but they were a lot bigger before I was completely out of them. So I think focusing on cutting those winners a little bit sooner and letting a small piece of it ride and hold on to that.
So a larger focus on booking profits into stronger moves, you'd say?
Yeah, exactly. So
And
I
see, well, you
what were
got
you
it,
gonna
you
say?
got it.
Yeah, I was
I
just
was
gonna
at,
say that like I turned it into a system, kind of like what you said actually a couple months back. Is you take a third, you cut it when you've reached 3 to 1, so you pay for the trade. You take another third when you think it's kind of reached its top and it's just getting tired, and then you let the third just run however it needs, just
right.
trade. Yeah.
It seems like we touched on a pretty similar point there, where a big improvement for us this year was a larger concentration of capital into one idea versus
Yeah.
trying to take every trigger,
Mhm.
every alert that triggers. That's something I've been constantly working on my entire career, and especially having to be kind of the maestro of the alpha chat. Something I really struggled with in the beginning with the alpha chat was I felt like I had to quarterback every single trade. I feel like I had to
Yeah.
be in every single idea.
Mhm.
It was kind of my duty, my role to do that. In the last 2 years, I've really gotten away from that, and I've separated my own portfolio with the own alpha chat trading and being the maestro, or whatever the hell you want to call that.
Right. Right.
So it's kind of we're learning similar lessons as the year goes on, and I think it was really important this year, especially because we got a really choppy year. Everyone
Yeah.
wants to talk about we're up 26% in the year, but it was a bullshit 26%, because we ended November and December down, what was it, 15, 20% last
Right.
year?
Right.
So
Yeah.
then, we got that. that kind of like that reactionary move, January and February,
Mhm.
which were two of my best months of the year. But it's like you got to take into effect that November, December chop previously, and then pretty much March through October, it was just we were in this crazy chop fest, and then
Yeah,
end of the
yeah,
year it worked out. So
yeah,
I mean, the one thing I hate that people do is say the S&P is up X amount this
yeah.
year and try to compare themselves to it. It just paints such a limited picture.
Hmm.
Um, but branching off that, what would you say some of the biggest mistakes you made this year?
Biggest mistakes. I mean, I think a lot of it. I'm still dealing with the bias that comes in when alpha chat is so convinced on one trade. So like my biggest loss of the year was probably Amed, which was really just, I mean, that was like, I just can't even blame anything. It was just bad luck. We were just like so ready to buy that thing. I think it was like probably end of quarter three or maybe beginning of quarter four. And it was just like an A+ setup. I think it was a trade a week like two or three times. And I made simple mistakes that I shouldn't have done, like loading the boat right off the open on a gap up. And I remember like Amid just kind of gapped up a little bit and it just dumped like super hard and it just completely destroyed me because I wasn't prepared for that, I guess. So that was my biggest mistake. So obviously the lesson learned there is be prepared and just don't buy right off the open, especially on a gap up, and just be a little more patient.
I think I wrote down that was the exact same thing for me, just worded a bit differently. Over anticipation of my favorite setups.
Yeah.
Just getting too big. My two worst names of the year. That Amed's in my like top five, and then PFPT Proof Point. This chart that
Yeah.
I was obsessed with all year. I was just loading the boat. I wasn't giving it. I wasn't attacking these things as systematically as my best winners, which were like B setups that just worked out so well.
Yeah.
I would be over anticipating the moves. I'd be way too excited about setups, and I would put on too much risk. Where the stop, I wasn't buying off support as much. The trades had to work much more quickly for me to make money. And as we know, the more you shrink your time frame down, the more random the price action is going to be. So
Right.
for me, and something I did well towards the end of the year, the opposite of that was in this Yeti where I was buying off support. I was buying huge size, but I was giving the right amount of room, so I didn't need that trade to work out right now. Whereas AMED, which you just mentioned, and PFPT, I needed those things to break out that day when I had the
Mhm.
size on, and that's a really difficult way to make money over the long term in this business. I can definitely attest to that.
For sure.
I think your camera's smoked, but we'll keep going.
Is it
Podcast.
smoked? Is it really smoked? Damn. Yeah, it is smoked. You're right.
All right, we got some good combo going though. Let's keep it going.
We can keep talking. Um, yeah, I mean, definitely, I agree that just kind of loading the boat too quickly, and I'm something I've learned, and after revising a lot of things, and something I just need to continuously tell myself is, if it's an A+ setup, you're gonna get more than one opportunity to buy into it.
Right.
And that's something that's been super important for me. Like a few stocks that I've traded like the last few months, I've been able to slowly build a position in. Like for example, LK, I did that when it had like a few days of consolidation, like a few weeks ago before it, or even just it was probably earlier, yeah, early December. It just had like four really tight days of consolidation, and I was already in that stock, so it helped me just watch it even closer. I was in, but not huge, so I was in enough to watch it, but not enough to stress if something happens. And I was able to just kind of watch, and I watched this really great pattern start forming. And every time it would get near that support, I would just add a little more, add a little more, add a little more. And at one point I was in risking like 25 cents on the trade. I was basically in at 30.25, and I had my stop just under 30, with a good amount of shares, probably one of my biggest sizes. And then it finally ripped. So super small risk, and I ended up selling some. I mean, almost at like, didn't it go up to like 40 or something, like 30? No, it was like 35, 36. So I sold a ton, made like 20% on it, and it was the easiest trade I can make because I didn't have to really worry about losing too much on it, and I just let it work over time.
It's
So
funny you mentioned that because it seems like all your points that you're making, I kind of worded it to things to touch up on just in different wording, where it's like what I did well towards the end of the year that I didn't do as well at the beginning of the year was getting in my favorite names, but buying them off support.
yeah,
Not buying for the breakout, adding through the breakout when it's time, but focusing on at support and stalking the setup. so that I don't need it to work right now, as we've mentioned a bunch of times so far.
Hmm.
So it seems like we got very similar lessons so far going
Yeah.
on this year.
Who
Look
would
at
have thought?
that. It's
Who
like
would
we
have
trade
thought?
similar names. Uh,
Yeah, no, it's good stuff. I'm really excited for this year. I think it's gonna be a good one. Just it's something I mentioned to Ben. I was talking to Ben because we do our monthly recaps and these things, and I felt like this year, just with knowledge and skills and stuff, it was very much like it was a consolidation year for myself. Whereas like I didn't see massive improvements, but I've built great habits and just great systems for myself so that I can prepare myself and really start to expand starting this year. So I'm looking for that breakout and
right,
in
right.
my life.
No, it's important. You build the right habits, and then everything follows.
Yeah.
I can attest. I can attest in my trading career. That's exactly what happened to me when I stopped focusing as much on day trader bullshit, and then I started focusing more on swings and ideas and stuff like that. Everything followed. It didn't follow right away, but
Mhm.
it took some time. But the P&L follows once you start implementing the right habits. I can definitely attest to that.
Yeah, I mean,
So
it's
okay,
about
go.
taking those long-term goals, just breaking them down into steps that you can take every single day and then just winning every single day. Because I mean, you
Uh,
can't lose if you win every single day of the year. You just
right.
can't. At the end of the year, you win.
I like
So
that.
if you just take it step by step and do what you need to do, you're gonna get there. Um, all right, what was another thing that we wanted to talk about?
Let's talk looking forward. What do you want to? What do you want to? What are some things you look to accomplish this year from a trading standpoint?
So I mean, my main focus trading, I definitely am looking to take less trades than I took this year. And the goal isn't just to take less trades. I mean, the point is that I want to be in trades that I don't have to consistently babysit. So being a little more selective, picking what really works for me, and building my positions in and just letting them work and not having to stress every day if it's up or if it's down, and then just check on it. Obviously, I'll be checking every day, but I just don't want to have to get caught in some stupid stuff. So I just want to try to avoid a lot of the things that I ran headed first into last year.
And that's one of the most difficult parts about trading in the group or trading in the app chat is that there's always so much action. And you're
Yeah.
sitting at the computer, and you're going to see 15 alerts go off. It's just so much opportunity all the
Mhm.
time. So it's
Yeah.
about I definitely agree where it's about like I want to focus on my best ideas. I want to be huge in those ideas, and I want to kind of cut out the noisy trades. Cut out the trades that have to work right now, or it's like I'm just going to be small in this. I just want to be involved and stuff like that. So
Yeah.
one of the things for me is very similar. It's kind of focusing, taking less trades, being bigger in the ones that I love, stalking those names so that I'm buying up support so that when I'm getting out, the trade has failed versus it's just failed for the day because it didn't break out.
Mhm.
Um, so that's definitely one of the things I want to improve upon as well. And then for me, every year I try to size up a little bit more. So
Yeah.
I finally got to do that. I put on my first 10,000 share trade in a $30 name. It's something I wouldn't have dreamed about doing when I first started off. And it's about because I was kind of every year I focused on being more and more comfortable in the uncomfortable settings.
Yeah.
Like 10,000 shares every 10 cents is a G-bone. I had that Yeti. It's like it had to go through. I went through a 35, 40K swing, and I just kind of got to eat that. But how
Yeah.
can I expect to have those 100K winners,
You can't.
200K winners in the future if you don't condition yourself for the uncomfortability that's going to happen? So it's like, so I think that we all made huge leaps and bounds mentally this year. We put a huge emphasis on the trading psychology aspect,
Yeah.
something I'm super proud of. That's like, I think that is so much more key, such a larger key to success than any other aspect of trading. I don't
Yeah.
care. I was going. We were talking before this. Like, what were some of your best winners, best losers? And I was looking at the trades, and like the numbers said one thing, but these are the trades I felt best about
Yeah.
because the psychological growth.
Yes.
I couldn't have done that a year ago, and
Yeah.
so I was more proud of those psychological winners.
Right. Yeah. I mean, before you're just kind of looking at red and green, and now it's like a whole nother language, because
Right.
you really have to, and that's why journaling is so important because you kind of forget those emotions that you felt right when you took the trade. But if you're able to, and if you're able to make this a habit of once you take a trade, okay, fine, maybe you don't put it right into your journal. You have like a nice special journal that you have, whatever, your little diary that you write in at nighttime while you're drinking some milk, whatever. But jot down like a little thing, a thought, just a little thought when you take a trade of whatever you just thought of, right when you took it. and that'll just start making a pattern. Then you add that later on into your journal and put more detail into it. But that way, because when you go back 3 months later or even like 3 weeks later and you took a trade, the only thing you're really looking at now is your P&L. But if you look at those thoughts and your emotions and whatever that you
a lot more context,
it really gives you a lot more data. So that's, I mean, I think that's still something that we need to focus on in 2020.
Absolutely. That's something I actually started doing that this year after reading Denise Schell's book. It was
Market Mind Games.
Market Mind Games. It was such a great book. I've always journaled and always got on my trading stuff, but I never really did it in the moment. And that's something I started doing as well. And I thought that was a huge improvement. It's so funny how it's like you write down, like, I was really happy putting this on, or I was excited or something. And you can get so much information out of yourself when you're putting on the risk, and you can look at what the market was doing and shit like that. So it's just endless, and getting endless data on yourself. So because you're a constant, work of improvement, or however you want to phrase that.
Yeah, and I mean, it's actually a controlled variable. Like you can look at market data all day long. You can look at the market all day long, but you still can't control what it does.
Exactly.
Whereas, like, you can look at your own emotions and your own data, and you can change that and test it. Actually, going back to that 10K share trade, Yeti. I've had a lot of people since the last episode. They've been talking about. They're like, we want to know like how Shake handles these huge trades. So maybe you can just kind of elaborate a little more on that.
Right. No, and it was just what I was talking about before, where it's every year I try to size up, and obviously you have to do it what your account allows you to do. You can't start putting on 10% of your account risk trades just because you want to size up. It doesn't make any sense. So everything has to be relative. But for me, it's kind of planning it out. I was planning on risking more than I usually do at every trade, and it's getting, as I keep mentioning, getting comfortable in the uncomfortable. You have to put those trades on where I've been so excited about this trade. Once it triggers, I want to have almost uncomfortable size because I have so much confidence in it and whatever it may be. So I'd say it's constantly focusing on that growth aspect, because when I was just starting out, I was taking 100 and 200 share trades, and now I'm going on to year 8 or whatever. But every year I've focused on the growth, the sizing up. Every year it's just been like, all right, I want to do. From my second year, it was like I want to put on 1,000 share trade. Then it was like 2,000, and so you just kind of have to focus on growth and understand that I'm going to be playing this game most likely for the rest of my life. So it's like I can't have these finite goals where it's like I want to do this by the end of this year. I don't care when I do it. As long as I do it in my career and I'm always growing and so on and so forth. I'd say it's just a constant focus on growth in every aspect of life, and it spills over into trading.
I agree. Yeah. And I mean, it's just like anything else. You go to the gym, you can't just walk in and bench 300 pounds. Like, you have to go up each plate, or else you're not going to get there, or you're going to get injured, and it's just not worth it. So, people always want to take shortcuts in certain things, but there's just like sometimes the shortcut is just taking the long route.
That's a bar. That's a bar.
That's a spicy one. Wow. We shoot the shit.
Sometimes taking the shortcut is the long road, he said. Wow. I don't know what to go from that. That was cool.
I mean, I probably stole that from someone. I definitely did not make it up.
Nope, you made it up just now. I saw it.
It was quotes. I swear, you can't see it because my camera died, but it's in quotes. But no, I agree. And, this year I sized up a lot, which was really nice. And I think I was able to size up probably a little bit quicker than most people do, because I had some access to capital. But that's the other thing is, like, even if you have a lot of capital, you want to just start small. And that doesn't mean that you're going to be small forever. And in fact, you probably size up faster because you have the capital aside, and you can just start to test yourself. Because, like, there's a point kind of where you have an account and you feel like you could size up, but you financially just can't.
Right.
And, like, so for those that do have a lot of money, I still don't suggest starting with all your money. Start really small, and it's a lot faster than you think if you have the money on the side waiting. You just have to study and work, and then you can size up a lot quicker than most people can.
Absolutely, and you don't want to put yourself in a hole, most importantly, because I tell the story all the time when we do these things about the guys that me and Ben came up with who just had the crazy accounts, and they'll take 80K loss, and then they take another one, and then they would take a 40K loss, and all of a sudden you're down 200K. So like to get that back, I have to put this crazy risk on, and so it's all about taking the long-term aspect, all about longevity, and just learning more and more as you go, and having that constant focus on the learning.
Yeah, never-ending cycle.
Never-ending cycle. It's a beautiful game.
It really is. It really is. Well, Shake, you want to talk about anything else?
I think we wrapped this one up. This is nice little shit has been shot.
Yeah, I'm pretty pissed that this camera died, but I'm gonna get this thing charging. We'll see how it came out. If anything, we can always shoot another one or whatever.
I'd say this one's better than the last one, but the next one is going to be a lot better than the second one.
And then the next one?
And then the next one? Oh, shit.
Oh, man. And then the next one? Okay.
Shit's about to be shot.
And then, I mean, I think the other thing that also kind of helps is, like, because the first one that we did, I completely forgot that you can just edit stuff and just cut stuff out.
Yeah.
So we can just, like, talk and pause and then just start again, whatever. So we're cool.
Yeah, no, I'm going to keep it live, though. It's action.
Well, you should do a bloopers after. You should just do a bloopers episode.
Yeah, I think you're really under anticipating the amount of free time I have in a day. All right.
This is why we outsource stuff, man. That's why the other people do this shit for us. We just talk ours, let somebody else listen to it, and then edit it and whatever.
All right, I like that.
All right, cool. Well, let's say a little goodbye. Also, I mean, ladies and gentlemen, thank you for listening. Shoot the Shit episode 2. We're gonna hit another one hopefully very soon. Hit us up with any questions that you have that you want us to talk about. Again, doesn't have to be directly related to trading. We're just here to shoot the shit, give us give people our perspective, and see where it goes from there.
All right.
Oh, very important. Smash that fucking like button. All right. Cool. We'll catch you next time.
See ya.